G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now they've both hit resistance, but at the moment they're continuing to consolidate since our last update. And of course we're going to go through some divergence to be aware of, so make sure you hit that like and subscribe button to support the channel. Now looking forward, also reference the +1 videos for a deeper dive into the trading strategies. In terms of the outlook, as of today, October 8th, the S&P 500 shows a modest pullback with narrowing breadth, while the NASDAQ is still led by tech and AI related winners. Geopolitical events such as in European and Asian political uncertainty, US fiscal risks, and active conflict zones amplify market sensitivity, meaning both indices remain vulnerable to rate and policy surprises and sudden risks. So on the S&P, first of all, the weekly chart is showing a nice big bull run above the moving averages. Although do notice on the CCI1500 down here, we've got declining highs, and that's still considered a bearish divergence. So at some point, the price will retrace, obviously. It's a matter of when and how far it will go. But cautiously bullish at the moment. And as soon as you start seeing that pullback, especially when it breaks below the CCI into that moving average range, we'll close out any long positions on if you're trading on the daily. On the daily chart, you can see there we've got this resistance that we drew last time at 67.52. That was our last update on that dotted line, and since then it's been consolidating just around that resistance area. Again, notice the CCI bearish divergence there, lower highs slightly, and again, as soon as it starts pulling back a bit more, we'll draw a target range on the daily as well. You know what, in fact I might actually draw it now just to start it, since it's hit that resistance and it's pulling back slightly. Now we'll take it back to the significant low, and the significant low, I like to see it where the moving averages were last bent on the downside. You can see here these moving averages were still in an uptrend, so I'll take it back to that low there at the very latest. And if it does pull back, we can expect a Fibonacci retrace in that 23-38% range as a minimum. Could go a lot further, of course, or it could actually fail. We don't know until it starts happening, but assuming it pulls back from where it is. Otherwise, if it keeps rising and breaks through that resistance, we'll just extend that Fibonacci range upwards. That's the daily. Now if you look at the hourly chart, we always look at the hourly as well as the daily and the weekly. Remember, if you're trading on the hourly, we trade in the direction of the daily. If you're trading on the daily, you trade in the direction of the weekly, and so forth. So at the moment on the hourly, what we look for is any divergence. So assuming you're going long on the according to the daily trend, we take long trades whenever the price and the CCI break to the upside. Now you'll notice here as well, we did have a shorter term bearish divergence on the CCI versus the price, pull back, hit our target range, and since then now we've got a triple top on the price as well. But notice the CCI is still dropping, and this could actually go a lot further. It's already hit that range there, and that was drawn from that high to that low. So what we're going to do now is we're going to extend it to that low there, and that could actually fall further, and it's actually already hit the 23% range there, and it could go as low as that 38% retrace. So because of that almost triple top there, and the CCI is still dropping, so there's no sign of a recovery yet. So that's the hourly. Now if we go to the back test, again going long from about the 1st of April, the 1st of May, around that period there, indicated here on the 1 hour chart. Remember, we're trading in direction of the daily, so we trade the 1 hour period, and you would be going long as the CCI and the price are in a bullish momentum. What we look out for here on the 1 hour chart is you look for any bearish divergence. You can see there we started seeing a bearish divergence at that point, and it started as soon as you start seeing the I was giving you a warning on the CCI. As soon as you start seeing the price or the moving averages bend down like I did there, and I've deliberately zoomed out here so you can see the moving averages a bit clearer. I don't like zooming in too closely because it's a bit like watching the bugs on a windscreen. Okay, so you don't want to get out too early. Just by zooming out, you can see there, as soon as it breaks on the moving averages start bending down, you get out of the trade, and you would have got out before that drawdown on that example there. And you follow that same pattern throughout the whole period, going long as the daily is in an uptrend. And again, you look out for any divergence or any break into the moving averages when the CCI breaks into the daily, like it did at that point. It did it again there. That's where you get out of the 1 hour trade whenever you see those daily breaks to the downside. but also you pay attention to any divergence on the 1 hour time period. Now at the moment, as I said, you've still got a bearish divergence here along with that triple top, and it's already hit that 23-38% range, but again, I would be cautious about going long until I started seeing the CCI and the price break a bit higher as well. So the NASDAQ's got a similar story on the weekly. First off, bullish momentum, although notice we've got a bearish divergence. Slightly lower highs on the CCI versus higher highs on the price. And I've already drawn a target, but that's actually risen slightly. On the daily, you can see there it's still hitting that resistance and consolidating in that range in the last few days. And we've still got a bearish divergence on the CCI versus the price. And then on the hourly as well, it's actually risen slightly above that resistance level, but still consolidating. You notice that the CCI is still dropping. So again, avoid going long until we see that break through that moving average range, above that resistance and up through those moving averages on both the CCI and the price. And looking at the back test as well, again, going long from about the similar period around the 1st of May, roughly, indicated here on the 1 hour chart. Again, going long as long as the daily moving averages are in an uptrend, and so is the CCI, waiting for any CCI movement into that moving average range and closing it out the very latest with a stop loss at that point. Also on the 1 hour chart, again going in direction of the daily, and whenever the moving average of the price and the moving average of the CCI are in an uptrend, going long, but paying attention to divergence. So that's why, again, zooming out, I like to draw these divergence on the CCI, indicating there's a bearish momentum or bearish divergence on these periods. So you would have got out, like I said, on the S&P around that point there, going long again, getting out in a little bearish divergence there. There's another one there. This one was probably one there as well. No, there wasn't, from a distance anyway. Another one getting out there. Another one getting out there. Again, paying attention to divergence. Now this one here, you'll notice there's a massive drawdown. Again, that's why you should pay attention to divergence. As soon as you start seeing the moving averages bend down on the CCI and the price, you might have had a couple of positions open and you would have taken a small hit. Although had you played it properly, according to the average down approach during that whole period and getting out where you could have, you'd still be ahead and avoiding that drawdown. And at the latest, as I said, you'll be watching this consolidation. You've got a declining CCI. I'd like to see this break higher on both the price and the CCI to start taking long positions, and the daily showing long positioning to be taken as well. So make sure you hit that like and subscribe button to support the channel, and also if you enjoy the content, subscribe at least on the free trial to my Patreon page where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.